Wanted to get you on because we were talking about the opportunity of getting some, just content out, just a good way to do it. So we got Aaron Dickerson, Dickerson CPA,
Yep.
or give us the official name.
Yeah, Dickerson CPA LLC. My
Right on.
website is dickerson.cpa. There's
And
no
so we're
dot com.
going for it as far as like really building the business, want to focus on new business. Tell us just a little bit about yourself, how long you've been in business, what exactly do you do, why do I need a CPA?
Yeah, so I've been doing this on the side for several years now. I've been in Austin for a little over 3 years. Been in the industry for, I don't know, 8 years now, I think.
Okay.
7 or 8 years. Was working in accounting in Ohio before I moved here. Moved here, did some private equity real estate startup type stuff. And then this past fall, started doing this full time after building some clientele on the side. So it's what I love to do. I'm mainly working with small businesses and their owners,
Okay.
compliance, tax planning, cleaning up their accounting, getting them on a good system so that way they're not having headaches during tax season, those kind of things.
So, from my experience, most business owners don't really get in touch with the CPA until they really need one.
Mm-hmm.
Um, what are some of the things that you would say to a business owner that they would consider reaching out to you sooner than later, other than some of the obvious, like, it's a lot less expensive if you reach out sooner than later. But, business owners, what I've identified is most of them are what I like to call technicians, right? They're really good at what they do,
Mm-hmm.
but they might not be the actual best person to run a business,
Right.
right? So if you're like, we'll use the roofer, he's the best roofer ever. He can sell a roof, he can put a roof up and everything. But then when it comes to like payroll, hiring, taxes,
Mm-hmm.
all of a sudden he's like, oh, I got to get my taxes done. And he comes to you and you're like, oh, this is a mess. Here's how much it's going to cost. And hypothetically, if he would have done things sooner or would have been less expensive, I mean, what are your, what are some sound bites that we can get to that business owner so that they can save money on all aspects of getting together with a CPA?
Yeah, so if you're just getting started out, or if you're in the position where you're like, hey, my stuff's a mess and every year tax time is a headache, the first thing, number one thing to do is make sure you're not commingling your business and personal
Okay.
expenses and transactions. So keep separate business bank accounts.
Yep.
And make sure all your business transactions are going through there. And when I say bank accounts, I mean checking, savings, credit cards, all of that stuff. So make sure your business transactions are going through those accounts, and make sure your personal transactions are going through your personal accounts. Because then even if you aren't keeping your accounting records, it's a lot easier to go backwards and get them up to date
Sure.
if everything is separated.
Do you offer like bookkeeping for small businesses?
I do, yeah, on like a monthly fee. I don't do just bookkeeping. So if someone comes along and they say, hey, I only need a bookkeeper, I already have someone handling my taxes, I don't do that. It's just not the kind of clients that
Sure.
I work with best. But if someone comes along and says, hey, I want to keep my hands off of this, I want someone to handle this for me, that is something that I will do.
What do you think? Here's a better question. Do you feel like when people come to you and it's later than it should be, do you think it's out of, just ignorance, not knowing exactly what it is that they need? Or is it more, you know, out of sight, out of mind? I know this is something I should have done, but I just didn't.
A couple different things. Yes, sometimes it's ignorance. They don't know that they need to be keeping these things separate, or they don't know that they should sign up for QuickBooks or another accounting software. Or I've seen some come along from other accountants. Like, we have these companies now like Collective. You've probably seen their ads on Instagram and stuff. They claim to offer, full service bookkeeping, tax filing and stuff
Okay.
for a monthly fee. I've onboarded clients from them that are still a mess. So
Wow.
in that case, it's out of mind because they think somebody's taking care of it, and it's actually not getting taken care of how it should be.
That's interesting. Do you ever run into a scenario as far as maybe the ignorance where people think I'm not big enough or important enough to need bookkeeping and or, tax services?
It's usually a budget issue
Okay.
before I'm not big enough for this. Because the cost of having someone else handling your books on a monthly basis isn't cheap. And if you're just getting started out, it's not something that you necessarily want to be paying for because it's not really providing value to your customers directly, at least.
What would you say is like a gross billings, for a business that they should seriously consider doing bookkeeping and doing, tax
Hiring
services?
it out.
Yeah.
Um, 100 to $150,000 a year in revenue.
in gross.
Yeah, in gross revenue.
It's
Yeah.
interesting because I've been trying to get you over to one of my friends. I actually have a meeting with her this evening, and she runs I'm going to butcher this. It's like a counseling firm for, children.
Okay.
She's a psychologist. Which one's the one that can't prescribe the drugs?
Psychologist. I think,
Yeah,
right?
she's a
Yeah.
child psychologist, and she's running a pretty big practice, and she's doing all of the bookkeeping and all of the tax preparation, and she's good at it.
Mhm.
But I don't think that is where I don't think that's where she's best utilized.
Right.
So I'm like, why don't you just have this conversation? And she's like, well, I'm handling it. And she had a really bad experience in the past, probably with one of these online companies that you just described. And she's like, nope, I can't afford, to have this messed up. And I'm just going to take care of it myself. Do you run into that a lot where you find someone who is maybe not doing as good of a job as you would, but they're doing well enough that it's not creating issues with the IRS or anything along those lines, and you're just like, let me take this from you?
So with people at that level, first of all, it's hard to just say, hey, if you're making $100 to $150,000 in revenue, you need an outsourced bookkeeper because there's so many different variables. Do you have inventory or not? Like there's different things that make it more difficult or less difficult.
Sure.
So somebody in that revenue range could definitely handle it on their own. What I do with those kind of clients is I put them in QuickBooks Online, whether they're set up already or not. We go through a 2 to 3 call training class.
Okay.
Call it a couple 90-minute calls where we sit down, we let a couple months pile up, and we go through the transactions together, and I teach them how to properly do their books in QuickBooks. And a lot of clients, after one 90-minute call, they're all set, and they're good to go. Come tax season, everything's already there, and your tax prep fee is going to be less because of that. Because
Gotcha.
your CPA or whoever you're going to doesn't have to clean things up, and review stuff as much. And it's just going to be less stress on the business owner if they know that stuff is being handled how it should be. And you're getting accurate reports too.
Gotcha. Because it's no secret we have a lot of business owners on this podcast, and I would say the majority of them are real estate agents. Because it is kind of a real estate podcast, and it's very interesting to me the amount of real estate agents some of them aren't doing a ton of business, but a lot of them are doing a reasonable amount of business. They have a lot of expenses, whether it's for leads or, even for marketing costs with, signage and internet stuff that they're doing, along with, I know agents that do a lot of listings, that they do a lot of stuff in regards to stagings, and they pay for those things. And I don't, they are a group that's like, I never even thought about getting a bookkeeper. Like I never even thought about. And I think that that's one thing. If I were a CPA in your shoes looking for the clients that you're looking for, I think there's a lot of people that, and I know you mentioned the 100 to 150,000. I think there's a lot of people out there that they just don't see the value in it because they just don't know what it is. Right.
Yeah, and real estate agents are a great example with what we're talking about here. And I deal with several of them. They, you go pay for one of these like lead gen, whatever you're using for that, or to get signs, and you use your personal account, and then you forget about it. Well, there's a missed tax deduction.
Yeah.
Right? If you're not properly going through your personal accounts at the end of the year, and that's why I say keep those business transactions in the business accounts, because then everything's there when you need to look those numbers up to make sure you're getting all of your deductions.
Yeah, I think agents are just unaware of the things that are tax deductible. And then it's funny because I see their tax returns when they go to buy a home, and somehow they write off like a ton of stuff that I know it's like, you just kind of made that up.
Yep.
Right? Like I know you made those numbers up. I'm not going to name any names because, we're not the IRS here. But at the end of the day, it's like they know they want to get these tax deductions because they're trying to pay as little as they can in taxes. How easy would it be if they just had somebody that was tracking their expenses for them, and then at the end of the year was like, hey, here's all your expenses. Here's what you paid for it, and people are like, well, I don't want to pay a lot in taxes. It's like, well, maybe then, come Q3, and you have a general idea of what your taxes are, maybe it would encourage real estate agents to spend more money on their business.
Yeah, you have to be proactive about this when you're talking about tax planning and savings and stuff. If you come to a CPA or me during tax season and you say, hey, I want to pay the least amount in taxes possible. Well, you've already closed the year out.
Right.
There's a few things we can do, but it's pretty limited, what the options are at that point. So you want to be talking to somebody in Q3, like you said, that, hey, I have my books in order. I know what I've spent. Here's where I'm at for the year. What can I do before the end of the year to decrease this tax bill that I know I'm going to have, because you've already got all the records?
Yeah, I mean, I try to do a pro forma, every 90 days on my own stuff. Gold Star provides me a CPA and everything along those lines. Otherwise, I would hire Aaron. And we go through a pro forma like every 90 days, and in good years, like it's like, here's what you're going to have to pay. Like, it's like, how can I avoid this? It's like, do you need a new laptop? Do you need, you know what I mean? It's like,
Yeah.
what can we spend money on business related? Because again, I think about agents and they're like, I want to pay as little in taxes. And it's like, well, what if you invested more in your business instead of just like trying to figure out a way to like pay less to the IRS?
Mm-hmm.
Why not just, instead of paying the IRS, take that money and actually, buy some things that are going to help your business instead of making up expenses?
Yeah.
Not that anybody makes up expenses, right?
Yeah. And I like to remind people that paying taxes isn't necessarily a bad thing. It means you're making money.
Yeah.
You just want to be efficient with it, right? Like Matt said, you buy a laptop if you need a laptop, but you don't want to go buying 10 laptops if you only have 2 employees, because
Right.
you're still spending that money. And it's costing you, at the end of the day.
Have you ever heard of programs like Concor or
I haven't heard of that one.
so that's the one that we use. And then we used another one before that where, there are these online apps where you legitimately can just take a photo of the receipt or upload the expense right into the app, and it tracks it all for you. And then at the end of the month, I can just send over all of my receipts and everything along those lines to a bookkeeper who goes in and, makes notes on everything. But it's pretty cool because there's AI in it that like reads,
Nice.
kind of like what, and it gives guesses, so like I can go ahead and upload like a Spectrum cable internet, $75. AI sees that it's $75. That's easy. Sees Spectrum. It's in the computer's brain, like, and it'll label it internet expense.
Yeah.
And it's like a godsend for, the people who are doing my books.
The best app for you is the one that you're going to use consistently.
Sure.
And that's going to catch, all of your tax related transactions that you need. Most bookkeepers, CPAs are going to recommend QuickBooks Online just because it's a default. It integrates with the most apps, and that's who I'm, working with most of the time. But there's Wave, there's other apps like that. The one thing I would say is
Does
that
QuickBooks offer the opportunity though, like on your cell phone, to just take a
receipt.
photo?
Yeah, they have an
cool.
app.
Okay.
You snap the receipt. They probably don't have as much AI,
Right.
is what you're talking about, but it'll do, the receipt matching and all of that stuff. The important thing is to make sure that the app is also pulling your bank transactions in from your business accounts only, and that there is a way to reconcile those accounts.
Interesting. Okay.
And reconciling is just going to prevent duplicate transactions, which can happen quite a bit and can really throw your numbers off and cause you to pay. If you just give a report that has duplicate transactions in it to a CPA and they don't go through the transactions, you might be paying double tax. You don't know.
This app actually, when you go to submit the report, automatically will catch and say, we think we see a duplicate.
Yeah.
Because a lot of times I'll have like a, like sometimes the way my internet rolls over, I'll have like one from January, and then I'm filling out my report like February 5th, and I've already gotten another one of like, we think this is a duplicate, and I have to be like, no, it's not.
No, it's the next month.
Right.
It'll also, the reconciling feature will allow you to make sure you're not missing anything too. Something hit your bank account, you forget to upload a receipt. If the app isn't reconciling or pulling transactions from your bank accounts, that deduction is going to get lost.
So we're talking about like what I, to kind of nerd out, like I think these are cool things, not because I want to do taxes, but just because these are ways or opportunities for people to purchase things to enhance their business and do it at a, tax reduced or sometimes even tax-free opportunity. So kind of going back to one of my initial questions, what is it about business owners that, do they just not see the value? Because I like what you said about whatever app you're going to use is the best one, right?
Mm-hmm.
Why is it so hard to get people to use those things? I mean, it doesn't take up too much time. It's a huge money saver. And again, I'm asking you. I'm just thinking logically, it has got to be because people just don't know.
I see, if you're already in business and you're not tracking this stuff, it can seem kind of overwhelming.
Mhm.
You download this app and you got to start doing this stuff. Well, what about all the stuff that happened before this, Or people that are just getting started, they have their hands in so much stuff. If you're starting a business, the last thing you're thinking about is an app that you can snap pictures of your receipts with. So when people come along to me, the biggest issue that I hear from them is, hey, I have a CPA. They do my taxes every year, but like if I email them, they don't respond,
Mhm.
And so people probably feel like they don't have someone to go to for that. And I try to develop my client relationships in a different way. I don't bill hourly. I bill flat fee, project base. If I'm doing accounting for you, it's a flat monthly or quarterly fee, depending on
Right.
how often you want it done. And that includes, email support. You email me and I'm going to answer your questions. And so I think the resources aren't necessarily there for them, even from their CPAs. We have a staffing issue in our industry. We cannot find enough talent. It's super difficult to hire
Yeah.
people right now. And so that's why if you email your CPA right now, they're probably not responding because they have 100 other emails from other clients, So
Do you think there's a possibility, not maybe in the near future, but eventually, AI kind of closing that gap?
definitely, yeah, it'll help. We have a pipeline issue. The accounting, to high school students going into accounting isn't a sexy career. So
No.
there's an issue there that the AI CPA is doing a pretty horrible job of addressing. But I think that AI is the answer to that issue. And if you are in the right groups in our industry, that's where everything's heading. A lot of people are offshoring too. I don't like to do that just because of the sensitive info.
Yeah.
But that is another way that people in our industry are, kind of making up for that labor gap that we have right now.
The bookkeeping part is, I think, what surprises me the most. I mean, everybody knows that they need a CPA. You got to get your taxes completed. And if you're running a business, that's, you want to leave that to the professionals. But it's the bookkeeping part, I think, is what I'm more honing in on is, it's a lot of work, man.
It is, yeah.
And
yeah. There are great local bookkeepers that I've worked with, and I don't want to be a bookkeeping firm, so I'm not going to onboard a bunch of bookkeeping clients. So
Right.
I'm pretty selective about the type of bookkeeping clients I bring on, and everything. But there are plenty.
Well, you
of
could always
local
hire bookkeepers.
Yeah, and that might be something. I'm solo right now. That is something I'm exploring at this point, but. There are plenty of reasonably priced local bookkeepers that know what they're doing here in or around Austin. If you want to work with someone local, let alone, it's 2024, you can work with anybody in the United States anywhere.
Yeah.
With this kind of stuff.
Well, I have a gentleman that's a good friend of mine who will actually be here on Friday. He is currently doing bookkeeping for a couple of CPAs, and he's looking to
nice.
take on some more clients. So
Awesome.
that could
Might
be a
have to chat
good
with him.
conversation
Yeah.
to have because, yeah, he's local here, and he does good work from what I hear.
Yeah, it's a very necessary role, and even with AI and everything coming in, we've always said garbage in, garbage out.
Mhm.
And if you're not putting the right transaction data into the whatever AI service you're using, it's still going to provide garbage results, which
Sure.
is going to result in issues with your tax returns and the amount of tax you pay. So.
Right on. Well, I know you had some specific stuff you wanted to cover.
Yeah. Well, we hit on some of it.
Look at me go.
Yeah, nice, right off the bat. Yeah. So we talked about some issues just with bookkeeping and stuff, not using accounting software. Implementing questionable tax strategies is another huge thing I see with new clients.
Yeah, unpack that. What do you mean?
Yeah. So for example, with social media these days, you get sound bites of.
Well, I got to buy a G-Wagon every year, right?
Yes, yeah, and this is a perfect example. I
Okay.
have some here. I call it TikTok tax advice. It doesn't necessarily have to come
Sure.
from TikTok, but that's where I see it the most. Vehicles, writing off your 100% of your vehicle.
Mhm.
If you're not tracking mileage and you're writing off 100% of your vehicle, if you got audited, that's going to get thrown out the door.
Yeah.
You're going to have an issue. You've got to track mileage, even if it's a 100% business vehicle. buying your G-Wagon, you know.
Right.
If you're driving it for other stuff.
Because doesn't it have to be like over 2 tons or something like that?
Yeah, so that's for bonus depreciation section 179 to get your tax write-offs up front rather than having to write that asset off over 5-7 years.
Gotcha.
Depreciating it right now, tax law is great for asset purchases. It's 80% bonus depreciation right now, and that'll phase out. Lots of changes are coming on the horizon. I want to talk about that with the expiration of the Tax Cuts and Jobs Act, but. So vehicles is a huge one. It's not that they're not deductible. It's just that most people aren't doing what they need to actually make them deductible.
Okay.
So make sure you're working with somebody. You're using like Mile IQ, QuickBooks. If you're using QuickBooks Online, they also have a built-in mileage tracking feature, whatever app you're going to use, right? Paying your kids out of your business.
Oh, yeah.
Great tax strategy, but you got to make sure you're doing what you need to. They have to actually be doing work for your business, and you need to pay them at market rate. You can't pay them $6,000 for one modeling photo shoot. That's just not how it works. Yeah, you can do it. You can put it on your tax return, and you know that's possible. But if you get audited, that will get thrown out.
What about me renting my own house as a business?
Yeah, the Augusta rule.
The Augusta rule.
Yeah, I don't have that on my list, but that's a good one.
Yeah.
Same thing. It's all about being ordinary and necessary, and being at market rates. So if you have a $300,000 house and you're renting it to your business for, I think the maximum is 14 days a year. You can do that. If that's just off the top of my head, so I might be wrong, but 14 days I think it is. If you rent it for the full 14 days for the year at, I don't know, $10,000 a day, like just something insane like
Not
that.
gonna
That's
work.
not going to fly. It's like you can't do that. It's got to be at market rate, and you got to be doing it for a business purpose. So, are you having a Christmas party for your employees? Great. Okay, that might be a real legitimate reason to do it.
Like 1 day or 14 days?
1 day, yeah. Well,
We're having a 14-day Christmas. I mean, there's 12 days of Christmas.
Yeah, I guess if you want to do that, that's possible at market rate, right?
Right.
Or if you're doing podcasts and you have a podcast room like this in your house, like that might be a way to do it. There's several legitimate ways to implement these strategies, but the problem with these, social media posts is they don't take into account your specific business,
Right.
and they aren't giving you all of the requirements and the compliance necessities of implementing that strategy.
But I am a business.
Yeah.
Isn't that what they say?
Yeah. Oh, as an individual,
Right.
Yeah, that's another one that paying all your personal expenses
Right.
through.
I'm an
business,
LLC.
Yeah, open your okay. If you open an LLC, the IRS does not care.
Right.
The fact that you have an LLC does not matter. It's an unrecognized entity to the IRS. They call it a disregarded entity. If it's a single member LLC, nothing changes about your tax filings.
Yeah, it all funnels to your 1040s.
You get no extra deductions. You get no tax strategies from that. The only thing you're going to get to write off is the fee to open your LLC.
There you go.
That's all you're going to get from that, unless that opens up the opportunity to make an S election,
Sure.
and other things. But that's something you have to do other than opening the LLC.
What's more TikTok tax info?
see
I love
here.
this.
Paying for your pet's food, vet bills, and stuff because they're a guard dog. Business.
I've never heard of
this,
that one.
This might work in some places. If you have a junkyard or something, where you actually do need a dog to guard your property, your
Sure.
business property, right? But if you're writing off your dog that stays at your house and you're a real estate agent, that's
Right.
questionable. It's not going to fly. It's not ordinary. and
Need to bring my
necessary.
dog here.
Yeah, the important thing with these tax strategies is just think in your head, is this an ordinary expense? And the way to determine that is if you're a real estate agent, for example, do other real estate agents also need to pay for this?
Right.
Is it ordinary in my industry to have to pay for this? Okay, yes, it is. It's for signs. That's ordinary. Is it necessary? Yeah, signs are necessary
Yeah,
to
it's
advertise,
marketing,
to
sure.
show the house that you're selling, right?
Makes sense.
Is the dog necessary? Probably not.
Right.
There may be, you might have some specific reason, and maybe that's the case. You should, talk to a CPA if you think so. But ordinary and necessary, those are the like checkpoints for whether a thing is.
It's a good
deductible
one
or
though,
not.
because obviously I own this commercial space here, and I have a Doberman Pinscher, and she would love to live here to guard the place.
Yeah. Do you have security issues?
I mean, we are in Austin, you know.
I deal with enough of those at
we're,
my place.
We're
too,
low.
so.
We're low on police here, so I don't know.
I don't have an office. I work from home. I have a dog. We do have security issues. I don't think I have enough reason to
Right.
write off my dog.
All right, fair enough. I'm not going to do
Unfortunately,
it.
yeah. I love him. He'll get to stay though.
What else?
Let's see. Writing exempt on your W-4. This kind of ties back into what you were saying, where you're like, oh, I am a business, right?
Right.
So there's some videos I've seen floating around where you fill out your W-4, which is just a form that a W-2 employer gives to you, usually when you get hired, and it's how they know how much taxes to take out of your paycheck.
I run into this all the time on the lending side of things.
And there's a way to just write exempt on there and
Yep.
have no withholdings on your
Correct.
on your earnings. Well, just because you don't have it withheld doesn't mean you don't owe the taxes. You're going to get a big surprise. If you write exempt, January 1st, if you get hired, you write exempt on your W-4, you work all year, don't have any taxes taken out of your paycheck. Good luck when you start plugging those numbers into TurboTax or you hire a CPA, you're just going to end up paying it later with penalties and interest. So
I have buyers every single year that save up a bunch of money and they're like, I'm going to buy a home next year. I'm saving all my money.
mhm.
We call them, February, March, and they're like, I owe the IRS like 25 grand. And I'm like, how? You're a W-2 employee. Like, how is this possible? And they're like, well, I mean, I guess they weren't collecting enough withholdings on my, on my checks for W-2. And I'm like, what did you do when you filed your W-4?
Mhm.
And they all like have no idea.
Yeah.
They never know.
Right.
It's
The,
like,
the W-4 form changed a couple years ago, and I've actually seen a lot of taxpayers this year for the 2023 tax year, married individuals specifically, that did not have enough money withheld because they filled out their W-4 form wrong, which honestly I don't blame them for it because the form is horrible.
yeah,
You talk to any CPA right now and they would say go back to the old form. But there is a box on there that is dedicated to people that either have multiple jobs individually or if they have a spouse that also works. And if you don't check that box, your employer is assuming that your income is the only income you have. And so
interesting.
then they're not withholding enough because they're not aware of the other income sources you have, whether that's a spouse with a job or if you have a side business, those kind of things. So it's really important to make sure your W-4 is correctly filled out and you're not going to have a balance due at the end of the year. And I'm seeing that a lot more often.
Gotcha. Are we
So you touched on something. We're good on tax advice, I think, or the
TikTok tax advice? I love that.
There's plenty of
I'm gonna
other
totally steal that.
things on there on social media, but you talked about people coming to get a mortgage, and I want to talk about mortgage underwriting for
Yeah.
self-employed individuals, specifically what I'm aware of, and you can add to this, and there's probably several other things. Just the general distributions versus net income
Yep.
conversation, but also how you guys handle depreciation add backs when you're calculating, what people qualify for.
Yeah,
on a
so
mortgage.
let's start with depreciation's an easy one. I mean, depreciation, whether it's on a Schedule E, which is going to be for your properties, which helps in regards to showing positive rental incomes, or depreciation that we'll see on, like a Schedule C, for example. That's all we're able to add that back in 100%.
Yeah, so I want to dig into this
Yeah.
so people understand. We were talking about buying laptops earlier, business assets to make sure you're being efficient by the end of the year, buying the things you need for your business. If you're buying these assets and they end up on a depreciation schedule rather than just on an expense line item, when you go to get a mortgage, that number will be added back and not counted as an expense
Correct.
when you go to qualify for a mortgage. So it's good to work with somebody to make sure that you're properly, because the right way to do that is put it on a depreciation schedule. It's not like you're doing something wrong here, but put it on that depreciation schedule rather than just listing it as office expenses. So that way those numbers are properly accounted for when you go to get a mortgage.
Yeah, I have a friend of mine that owns a towing company, and they're buying new equipment, trucks, stuff like that,
Yeah.
every year that is put on the depreciation line items. And when we do his files, I kind of always sometimes have to point it out to underwriting because in regards to like net income, it might be just to use round numbers, it might be like 50,000, but then we're adding back in like $200,000 of depreciation. It's a game changer.
It is, yeah.
And tow trucks are expensive.
Yeah, and those are the businesses that has a huge impact on, the ones that are buying expensive equipment like that.
Right.
But if you really think about this theoretically, when does that ever get accounted for on the mortgage underwriting side?
What's that?
The expense, because the business owner is still having to pay this money out, right?
Yeah. Yeah. I mean, I guess I never thought about it that way because, yeah, I mean, it's still an expense. Why are they not counting it as an expense? Why aren't they
Hmm.
just not going off of the lower number? Why is it able to be added back in? But I think the answer to it is because people always ask me from, self-employed business owners, why am I not going off the gross income? Right?
Yeah, yeah,
So, hypothetically, you're not writing off $250,000 worth of depreciation if you're not making over $250,000.
right.
So, if but yeah, I mean that's an unusual example.
Hmm.
Where it really comes into play the majority of the time is, when we're dealing with Schedule E people, as far as
So
real
unions.
estate is concerned. That's where I see it the most, and that's where it makes the biggest difference because people have mortgages on properties that are investment properties, and
Hmm.
just to use round numbers, let's say the mortgage is $1,000, but they're claiming that they're bringing in $2,000 a month for rent, right? And that's all most homeowners know. They're like, yeah, the lease is $2,000, my mortgage is 1,000, I'm making $1,000 a month, and we need that income to qualify. Well, we see all the expenses, we see the taxes, the insurance, the repairs, all of the things that are associated. And I'm like, yeah, you're not making any money on this property. And they're like, no, I am. And I'm like, no, you're not. Either you're, putting fake expenses on here or
Hmm.
you're legitimately not making money on this property. But it's when it's written off as depreciation and we're able to add that back in, that's when we do see. And I know from a tax standpoint, and here's a question I have for you on the real estate side. From what I understand, I mean, that depreciation is ultimately deferring taxes that will be due when the property is sold.
Yeah, and unless you 1031 or there's some other ways out of that.
To defer,
Yeah.
and that's the
Well,
word we have to use.
yeah. So depreciation, and you got to make sure you're taking it too, because and this is something I had on here: allowed versus allowable depreciation. I think is what they call it, but
Hmm.
you're basically just deferring the tax burden until you sell the property.
Right.
So you're writing that off. You're writing all that off. Well, that's as you take depreciation, it's reducing the basis on the property. So if you buy a property for $200,000, you keep it for 10 years. Over the 10 years, you take $100,000 in depreciation. You now have a basis of $100,000 in the property, even though you paid 200 for it because you took that depreciation.
Right.
So now you go sell the property for $300,000. You have depreciation recapture. Your total gain is going to be 200 grand, not 100 grand.
Right.
And that depreciation recapture, there's different rules there. There's specific rules in real estate that kind of lower the rate a little bit, but it typically gets recaptured as income in the year of sale at ordinary income tax rates. For real estate, certain types of real estate property, those rates are capped, I believe, at 25%. That's
Okay.
getting pretty far into the rules, but yeah, you're just deferring with depreciation. You are not eliminating that tax. Here's the thing, though. You're like, well, I don't want to do that, right? I'm just not going to take the depreciation. So you go 10 years, you don't take the depreciation. Guess what? Your gain's still $200,000 because
Right.
the IRS says you could have taken that depreciation and you should have taken it, and so you're still going to pay the recapture tax. There's ways to fix that. I've had several real estate clients on board with me, and I'm like, hey, this depreciation stuff is messed up. We need to file some forms to retroactively fix the issues. But yeah, just not taking the depreciation is not a way out of it.
Right. Yeah. And again, we go back to a lot of these homeowners that own these rental properties. And I'd say it's probably it's almost a 50-50 split. Half of the people that I know are not taking the depreciation that they should be.
Hmm.
Um, and then, gosh, it's a little shocking to me, but there's a lot of people that aren't even writing investment properties off on their tax returns.
Something else similar to depreciation that I see missed a lot of times is loan fees, amortization.
Yep.
Loan fees being written off on rental properties. That is almost always missed.
Right.
If you're not working with a competent CPA, you could be working with a CPA and they'll miss this kind of stuff. If you're not working with a competent CPA that has real estate experience, they will miss this stuff. When you refinance, those things need to be added to your depreciation slash amortization schedule, and that can add up to quite a bit.
Yeah, for sure. From the person, so, I'd love to touch more on, businesses because let's face it, that's really what you're going after, right? I mean, you're
Hmm.
not trying to find the W-2 employee who you know?
Yeah, it's not typically who I work with.
Right.
If they come along, I'll help them, but it's not typically my
So outside of
focus.
networking, you know, doing things like this podcast to get the word out, what else are you doing to generate new business? Because I always sit down with other entrepreneurial people, and a lot of the information that we talk about on this podcast can be, you know, it can be transferred to any business type. So
Mhm.
is there anything that you're currently doing to try to generate new business that is or isn't working?
Good question. So during tax season, I shut my pipelines off
Okay.
because it's just too much to try and onboard people during tax season. 90% of my new clients are referrals from
Okay.
people like you, other people like financial advisors, and the like, friends, family, people I used to work with. I'm starting to do this outreach again, podcasts like this. I have a couple other similar types of things set up. I'm overhauling my website right now, just the content that's on there. And once that's done, I plan on doing some targeted ads across the country for specific types of clients.
Do you and you don't have to answer this if you don't want to, but just based on your current book of business, is there a portion of your book of business that you would be willing to give up if you could backfill it with, for lack of a better term, better clients?
Absolutely, I have a list. Yep.
And then
I fire clients. That's
Right.
what we call it in our industry.
Yeah.
We talked about the pipeline issue in the accounting industry earlier, and that's just making it worse. And if you
So
get
what makes for a bad client?
people that aren't keeping their books, aren't keeping their personal business transactions separate, aren't using an accounting software, are wanting to implement tax strategies but aren't doing the two things that I mentioned, because those are like, you've got to do that if you want to start implementing tax strategies, or you're working off of bad data. People that are rude. I've had that
Sure.
quite a bit. I've brought on a couple new people this past year that I am dropping because they just aren't nice.
Right.
And I just don't have time for that. So
The people who are not, you know, keeping their books, do you at least kind of give them an opportunity and say, listen, you really need to get a bookkeeper? Because I would envision, is there any other excuse other than, sorry, Aaron, I really apologize. I'm just so busy.
I don't think there is an excuse to not be doing it, especially if you've worked with me, because I'm going to give you several options. I'm going to say, hey, I can do it, and it's going to be X dollars for you to do that. Here's the different options of how often and everything and the cost of that. If that's out of your budget, then that's fine. We can do some training calls, and I'll teach you how to do it right. And you can, keep up with it every month or every quarter. And if you don't want to do that, then let's find you a good bookkeeper, someone that just does bookkeeping, who's going to be a little more cost effective for you, those lower budget, lower activity businesses, and get you set up. I think there are options for every business. And if you aren't doing that well and you've already been guided by somebody, I don't fault people that haven't had the right guidance yet. But if
Right.
you've had the right guidance, I don't think there's an excuse.
And so do you come across clients that you do all of the coaching, the guidance and options, and they still just don't do what they're supposed to do?
Yeah, to guess, I would say maybe 20% of the people.
But it's a lot.
If someone not 20% of all my clients, but if we look at all my new clients for this past year, I'd say maybe 10 to 20% of them just aren't coachable. You can't teach them to either use somebody correctly to do these services for them or to do it themselves. But I think in general, most clients are up for it. They just don't know how to start.
And the ones that are non-coachable, I mean, and again, I guess we'll never know because we can't get inside of their heads, but what do you think the reason is behind it? I mean, is it just true laziness? Is it, again, are they just dumb? Like,
I don't know. I don't know if it's,
maybe it's conviction, like they don't believe that
could be
it's
that
necessary.
Some people hate the IRS and they see us as an extension of them almost. And when I try to help people follow the rules, some people don't take that well. Rather than just like getting around the rules, like, hey, let's follow them and use them to our advantage. They don't like that strategy. They like to follow the TikTok tax advice we talked about earlier. Or some people are just like that, I guess. I don't know.
Do you find that there is a common denominator of the type of individual who hates the IRS, or are they all built this differently?
So I haven't noticed any patterns specifically like that, but what I have noticed is that different personalities work in different industries in general.
Mm-hmm.
And so I've been able to identify the, type of client that is likely to show up at my door based on the industry they're in. So if you go to my website and you try to book a consultation with me, I'm going to ask, you got to fill out a form. You gotta
Mm-hmm.
answer, what industry are you in? Do you have a website? Like, I'm going to do a little research on your business before I end up on a call with you. And if you tell me that you're part of an industry that I have experience with, I can kind of imply the type of person I'm going to be working with. Not always, but I have noticed that, like, I work with a lot of fitness coaches, chiropractors, health dietitians, those kind of people. They are almost always coachable because that's what they do.
Right. They're
So
coaching other
yeah,
people.
so they come along and they are so easy to work with.
Okay.
And then I'll be upfront. I know this is a real estate podcast, but a lot of times real estate individuals are difficult.
I bet.
I found that I have a lot of real estate
I have to deal with them
clients.
every day.
Yeah. And I've been kind of shutting that part of my pipeline off because I'm like, hey, I have a lot of real estate clients and I'm not comfortable with the amount of concentration I have right now.
What are they difficult about? The unrealistic tax strategies?
I don't think they're too difficult about that. They usually come along with those, and then you gotta teach them,
Right.
And they typically are fine with that. The biggest problem I see with real estate clients is personal and business transactions, specifically agents on that one.
Okay. Meaning they're like mixing personal and business.
Yeah, like they just don't have separate accounts for their business transactions, and so you end up with personal account. End up at the end of the year with personal accounts, and they just give you an export of it, and it's like, okay, well, there's a bunch of personal stuff in here, and I have no way of knowing what is what.
And why do you think that is?
I don't know. A lot of people start as real estate agents on the side, so maybe
Okay.
that's part of it.
But how hard is it to get a business like credit card?
It's not hard.
'Cause
It's
here's something that's
I would
really-
argue that it's easier to get a business credit card than it is a personal.
Okay. I mean, even if you have a personal card that you use only
Yeah.
for business.
Yeah, so it doesn't even have to be that these accounts are in your business name. That's a good thing to bring up.
Yeah.
You can just get a separate, or if you already have a personal card, like just stop using it for personal stuff and, going forward, only use it for your business transactions.
Because one of the biggest problems I run into in my business, and this is like interesting to hear this about real estate agents. So when we track money in regards to like the final cash to closing, right?
Mm-hmm.
What a lot of people will do is they will wait to provide me the bank statements that I need. I think there's a couple reasons. I truly believe the main reason is that I think that there's a misconception that if you show me how much money you have, that somehow I'm going to figure out a way to spend it. And so I'll say, hey, I need the updated bank statements for, where your down payment funds are going to be coming from. And somehow that translates into, here's my just general checking account. And it's got like $2,500 in it. And I'm like, your cash to closing is like 40 grand. Like where will this money be coming from? And so like, it'll be coming from this account. And I'm like,
Okay.
Right. So finally we get like 10 days before closing. I'm like, look, I need these updated statements. I need to see where this money is coming from. Yeah, no problem. They send me an updated statement and there's a $35,000 deposit into it. Right. And I'm like, well, I noticed that there's a $35,000 deposit into this. Where did this money come from? They're like, well, I wired it from my savings. And I'm like, okay, well, now I need 2 months worth of savings statements to show that the money came from your savings and not like an offshore account in, Tijuana. And they're like, okay, fine. So then they send me over the savings statements, right? And in these savings statements, there's like 4 different deposits, one for $4,000, one for $10,000, one for $3,500, and another one for like $6 grand. And then there's $35,000 wired out of it. And I'm like, there's 4 or 5 other large deposits in here now that I have to source and season.
Mm-hmm.
They're like, well, this one came from this like savings account that I have that only had like $3,500 in it. And this one came from another savings account that I like barely ever use because, this is the one where I like hide money from myself. Because if I put it anywhere else, I'm going to spend it. And then this money came from like my IRA. And now I need all of those statements.
For 2 months, right?
Right.
Yeah.
So to hear you say like, yeah, I don't understand why real estate agents, they just mix their personal expenses. Like the amount of accounts that I know that I see on a regular basis, because having a business account makes complete sense versus a personal account. But I know people that don't run businesses that have so many personal accounts because they're hiding money, or like we call this our vacation account. I'm dead
It's all
serious.
legitimate. They're just doing it for their own internal
Right.
madness.
And then exactly, it's a great example for their own internal madness. Because like I even get to see the statements, and like a lot of them you can name the like name of the statement,
Yeah.
and it'll say things like vacation slush fund, and the other one will be like, like Fido's vet bills. But now we're using it for a down payment, whatever. And it's pretty amazing the amount of accounts that I feel like the average American has.
Mhm.
So to hear you say like, well, there's just too much mix of like business and personal expenses, and it's just way too much work. I'm thinking like, boy, real estate agents are just a different breed, I guess.
Yeah, I've seen some where they are using their business accounts in the name of an LLC to pay their personal mortgage.
That's interesting.
Yeah.
I wonder what the reason behind that is.
I don't know. And I think it comes down to the specific client, the reasoning. In this case, it is the money was in that account. And I think a lot of people think when you transfer money out of your business account to your personal account, it's taxable. That's not how it works.
Right.
You're taxed on your net income, whether you let it sit in your business account or whether you transfer it to your personal.
That's what it is.
So I think that is the underlying cause for some of these situations, is people just don't understand how the mechanics of it work. And in this particular instance, the person had an S corp, and we should dig into that with real estate agents. But just worrying about taxes on transferring the funds, I think is what caused that specific instance.
Yeah, I have people that ask me all the time, typically like hairdressers a lot. Again, going back to like, hey, send me the account where this money is coming from, and then they'll just like dunk in like $5,000 or $6,000 cash, which is a huge problem because all money needs to be sourced in season for 60 days.
Mm-hmm.
And I'm like, well, why do you have $6,000 cash? Like, they're like, well, it's just been like sitting in the safe. I collect my tips, and I didn't want to deposit it into my bank account because if I deposit it into my bank account, like I'm afraid I was going to have to pay taxes on it. I'm like, that's not how it works.
Yeah, it's also not a good thing to say out loud. I don't think.
Right.
Because just because you don't deposit it doesn't mean you shouldn't pay taxes on it.
Right. But yeah, it's like just deposit your money into your account, like especially now with the way that technology is. It's Here's a great question I have for you that's kind of like philosophical. I would love to hear your answer because I'm sure you deal with this all the time. What is it about the average person that is in a business that thinks that they are so clever? I'm sure you run across a ton of people.
I get exactly what you're saying.
And it's like, where did you get the idea that dealing with, we've got the IRS from my standpoint, you've got lenders that are lending, trillions with a T, and like, you think you're going to like fool these people.
Yeah.
Like, because you're so clever.
They just are, I would say they're ignorant to the rules, the underlying rules and checks and balances that are there. Like
because of people like them.
Yeah.
Right? Like, you don't think these people that are lending trillions of dollars, or in the IRS's case, collecting trillions of dollars, you don't think they've thought of any of the things that you like innately came up with?
That's why, if you're writing off a vehicle, it's listed property. We have to list your mileage. We have to list the year and make and everything. So that way, if they come knocking at your door, they know exactly which vehicle to be looking at.
So where does that clever mentality, do you think, come from?
I really don't know.
I don't either.
I'm stumped, honestly. I know
think
exactly
about it all
what
the time.
mentality you're saying, like, and I can think of people and everything, but I don't know where it comes from.
Like, when you were like real young, I mean, my dad would always say when I was like a teenager or even in like my early 20s, he'd be like, oh, he's 19 years old. He knows everything. Just ask him.
Yeah.
Right. So like when I see kids, and I call them kids, like anyone who's basically under 25, like I'm old to the point now where I feel like you're kind of still a kid. When I see kids talking like that, it makes complete sense to me. I'm like, oh, I swear this is why they like recruit 18-year-olds into the military. Like
Mhm.
you have this just you are an overly confident idiot at that age.
Yeah.
It's like built into us so that we can go and do dumb shit with full confidence.
Mhm.
I swear it's like a trait, for human survival. But I like to think that eventually you like wisen up and it goes away. But the amount of people, and again, being a CPA, I feel like you probably run into more of them than me. The amount of people that just think that they're clever, that they have figured something out, is amazing.
Yeah. One of the red flags, I have a list of red flags when I'm looking at
Please
clients.
go over them.
And one of those, and this is probably going to sound bad, but one of the biggest ones is people that are constantly saying, I want to do whatever is going to save me the most money.
Mm.
And that by itself is not a red flag. But typically, the person that's saying that and repeating it is somebody that wants to break the rules
Mm-hmm.
to, keep money that they should be paying in taxes or something like that, or not following, not correctly implementing the strategies to save the money.
Mm-hmm.
And it seems like these kind of people tie into this mentality that you're talking about, where they just think they can get around those rules by just not doing it the way they want to, rather
Right.
than doing what needs to be done.
Like I watched this, like it was like a TikTok, and I'm gonna butcher it because I don't remember the exact statistics. But you being a numbers guy, I think this will be interesting to you. When like polling like thousands of people and asking them, like where do you rate yourself in terms of a level of intelligence, right?
Okay.
Over 90% of people say that they are smarter than the other half of, the nation, for example. But that's not statistically possible,
Yeah.
right? And I think it's easy to say like, oh, on a scale from 1 to 10, like I'm a 6, right? Which makes you just slightly smarter than the other half. But again, if 90% of the people, even if they're saying 6, because that's still just
Pretty reasonable number to say.
still not an option.
Yeah.
Still not mathematically possible for 90% of people to think that they're smarter than the other half.
Yeah, that's an insane statistic. I've never heard that before. 90%.
Yeah.
It'd be different if it was like 60%.
Oh, no one when asked like, do you
90%.
think you're? I mean, just think about it. Like, think about one of the dumbest people you know, right? Like, if you ask them, like, hey, are you? They're gonna be like, oh no, I'm at least smarter than half the idiots out there, right?
Yeah.
And you're like, that's so dumb because that's not it's almost not possible.
Yeah.
I was talking about this with my mom, and she's like, well, where do you think you are? I said, I think I'm like a 5.
Yeah.
Like I think I'm a 5.
If we wouldn't have had this conversation, I probably would have said a 6 or 7. But
Okay.
now that we've had this conversation, I think 5 is a safe answer. Yeah.
I mean, there's smart people out there, and
There
I actually, one of my friends is a doctor, and I remember having a conversation with her, and I was explaining kind of my thought process through this situation that I was having, and she goes, "No, that makes complete sense. I think the same thing." And I said, "Well, I'm not a." Or what did I say? I said, I'm not a doctor," and her comment was, "Well, but you're smart." And I was like, "Okay." She's like, "You don't have to be smart to be a doctor."
Yeah, you don't. And I will say this, talking about different types of clients and stuff, I don't have any doctors or anything now, but when I worked at a firm in Ohio, we had several medical-related clients, and those were some of the ones that just didn't know how stuff worked because they spent
Right.
they dedicated so much of their
Yeah.
time to figuring out the, medical stuff that, when it comes to taxes and business and everything,
Yeah, they just don't
know
have enough
anything
bandwidth.
about it. Yeah. So
I get it.
everyone has their strengths and weaknesses.
Yeah. What else do we have on the sheet?
Let's see. Let's touch on S corp. So
Oh, that's right.
S corp. This is a hot topic on social media. Everything especially with real estate agents.
Okay.
S corps versus LLC. Right. That's typically how I heard it. It's really S corp versus sole proprietor.
Yep.
If you're the only member of the
Schedule
LLC.
C.
Yeah. Either filing as a Schedule C or as an S corp. 1120S. Everyone thinks, oh, I can save taxes immediately. Well, yeah, you might. Typically, specifically payroll taxes where you're going to save your self-employment or payroll taxes, Social Security, Medicare. The problem is people don't realize the amount of extra compliance that is required. You've just added an entire extra tax return you have to file every year. You better have your books in order because you've got to be tracking basis. Like there are all these underlying requirements that don't exist when you file as a Schedule C that now exist as an S corp. And if you are the type of person that isn't good at keeping up on that, you should not be making an S election, especially if your revenue, is under 300,000 to 400,000.
I was going to say $250,000.
Yeah, $250,000. Yeah, even with QBI now with the Tax Cuts and Jobs Act, it's the savings effect is even lower, just because of the way that everything is flowing there.
Where do you think the idea came from? In other words, like the trend of, going from Schedule C to an S corp. I mean, I find that, we talked about the whole TikTok things, but where do you think the idea came from?
So I think a lot of CPAs and tax professionals actually push it earlier than they should. And I will admit that I've done that before.
Okay.
I treat this on a client by client basis, but I will admit that I've probably pushed people into an S corp before they should. The reason that some tax preparers do that, though, is because now they have another tax return they can charge you for. And it's going to cost a lot more than your personal return does.
Gotcha.
So I've seen that. I've onboarded a lot of people where I'm like, they should have just never been an S corp. This is, a hot topic on social media too. So everybody's like, hey, I want to be an S corp because they've been told that they'll save in taxes, which isn't wrong, but they're just not getting the whole story.
Right.
So, and then the other issue is making sure that you have reasonable compensation. So as an S corp owner, if you are an officer, if you are providing services to your corporation, so let's use real estate agents as an example,
Okay.
single member LLC, you're the agent, it's your S corp, you've made the election, it's valid. You pay yourself nothing on payroll via W-2, that's a problem because you're most definitely providing services to your corporation because you're the only person that owns it or does anything with it. And so the IRS can and will come in, audit you, and reclassify your distributions as W-2 earnings that are now subject to self-employment or FICA, Social Security, Medicare taxes. And those are taxes that you do not want to be behind on because they're treated as like a trust, basically. If you're an employer and you're collecting those taxes out of employees' paychecks, like it is a big no-no to mess those up.
So just to reiterate that for real estate agents, ultimately, it can help you as long as you're paying yourself.
Yeah.
But because you're paying yourself, that's going to implement more taxes. But the reason it can be beneficial, and again, a lot of real estate agents provide me their taxes. We have issues with them getting home loans because they're writing so much off. This, and you're the CPA, so correct me if I'm wrong, but this is a way that you can help yourself with purchasing a home because you've legitimately W-2'd yourself. That is, from a lending standpoint, that's 100% like legit income that we don't even have to like calculate or figure out. Like if you on your,
That's interesting to know. I would have guessed that, but to hear that from you is good to hear.
Yeah, I mean, we just bought a home and my significant other runs with the 1120S, and that was like big for us because, she's paying herself pretty well on a W-2. And so when we looked at like, schedules, or excuse me, the 1040s, and we could see just right in the W-2 section, like that income is like undisputable, right? Now, don't get me wrong, we have to funnel back to the 1120Ss and make sure that there's not major losses that we need to count against that person. Yeah. So if you're the sole proprietor and filing a 1120S, yes, we're going to count those losses against you. So even if you have 60K, but then your business on paper is hemorrhaging 100 grand, we got 40 grand to work with.
Right.
So that can be an issue, but having that W-2'd income is helpful. And what's interesting is I do run into agents that are like, no, I got this 60K, and I'm like, yeah, but you got this over here that's negative 100, and they're like, but that's over here. It's like, it's your business.
What I do with my clients is I recommend they get an RC report. It's a separate company, a reasonable compensation report. It's like $500, and you go through this long questionnaire and answer like what you spend your time on, and they help provide a written report that says, hey, like here's what you should be paying yourself, and that way you have that report in defense of an audit if you end up in that situation. Because for tax planning strategies, the goal here is to reduce your W-2 compensation to as low as it can be, because then you're paying less Social Security and Medicare taxes. And obviously, it seems like it's opposite for mortgage underwriting. But
I was going to say, but it can be helpful in regards to mortgage underwriting if you're trying to
so
purchase
there's
things.
different things here, but on a tax planning perspective, you want that number as low as you can have it, and that's why people are motivated to just not pay themselves on W-2.
Isn't that like you're talking about an RCE report? Like, gosh, we used to use these back in the day when we would. It's crazy when we do no doc loans. It was like the work. I can't even remember what the name of it is, but it would basically say like, I'm a real estate agent in Austin, Texas. What is the average income?
Yeah, it's like that, but it also ties in because a lot of these clients are also doing a lot of admin work, so it ties in more than just one position. It's not going to just say, oh, you're a real estate agent, this is how much you should make. It'll say, okay, you spend 60% of your time as a real estate agent, but 40% of it is actually admin work of like processing contracts, whatever that would be in that industry. I don't know enough to talk on that, but do that questionnaire. I would look it over. If it's my clients, I always look it over, sometimes make adjustments to it. I get on a call, I talk to them about it, and that's how we decide their reasonable compensation for their S corps.
Gotcha.
I get new clients that come along from CPAs where they're paying themselves just like $8,000 a year, and this is their full time. Like, this is what they do. Whether doesn't matter what kind of business it is, and you got to make sure. The thing is like, there's a line on the 1120S that says officer compensation, and that number better be there because it's right on the first page, and it's a huge red flag. And I have plenty of 1120Ss that show up that don't have a number on that.
How painful is an audit?
I've actually never had a client audited, so
I'm sure you've had clients come to you that are being audited, though.
Yes. I don't typically take somebody on just for a representation type engagement. So when someone comes to me like that, I'm not typically taking them on. It really just depends. I mean, it depends on how your records are, right? If you did everything correctly and everything's in order, you might have some small adjustments from the auditor, but it should be pretty straightforward. It shouldn't be that big of a deal.
You don't have any horror stories of somebody that, just kind of played the game a little too hard? And
I don't have any audit specific horror stories. Here's one I have for you. And this isn't one of my clients, but I'm aware of somebody that would have overpayments. I just don't understand why they did this. They would have overpayments. They would wait until the statute of limitations was about to be up, which is 3 years for tax returns, and they would file their return, for 3 years behind, to claim their refund. Like, they would wait that long to get their refunds. And so then you're getting a late filing penalty. Like, you have all these penalties. It's like, why aren't you just it's not like you owe money.
I actually know one of my friends that did that.
Yeah.
And I'm like, why would you do that?
They're
like, well, because if I get the money, I'm going to spend it.
If you owe the money, okay, sure. Like,
no, but this is overpayment.
But if you're overpaid, like, take the money and hide it in one of those savings accounts like what you were talking about earlier.
I have plenty of financial advisors that will gladly hold on to your money for you and give it back when you need it.
The entity I want holding my money.
Agreed.
They don't have a right to it,
Yeah.
So, and that goes, this topic, it kind of crosses over to people that have a huge refund every year. If you have a huge refund every year, you need to file it. You need to fill out a new W-4 because you can put that, with where rates are now today. It didn't matter as much, a year or two ago, but with where rates are now, like, you should be putting that money in a savings account. Now, if you don't have any control, maybe it is a good mechanism for people that are like, hey, if I have that money now, I'm going to spend it. Then
well, it's also a good mechanism for somebody who says, if I owe anything to the IRS, I am not going to be able to pay it. Because I definitely run into those people. We have people with, IRS payment plans all the way back to, like 2012. And they're just, and we obviously count that liability, that monthly expense against them. But, every year they owe, and every year they just owe more, and it just keeps going and going and going.
Yeah, that's not a good position to be in. Luckily, I don't have clients that are in that position right now.
Well, that's because you're doing their taxes.
Yeah, it's because they're coming along.
I have these clients because they're doing their own taxes, or who knows.
Yeah, and a lot of times those kind of people just don't even reach out to,
Right.
If you're behind on taxes, there's a lot of, kind of your industry would call loan sharks probably, but companies that are like, hey, we're going to solve your tax problems, and then they don't actually solve your tax problems, and they just take your money. So
right.
A lot of those people are unfortunately, dealing with that kind of stuff rather than working with a competent individual. And it's honestly, a lot of times it's access, right? Like it costs money to hire a professional in any industry, attorneys.
People need to be
all of it.
compensated for their work.
So that's why you want to do it before you end up in that position, not when you're in that position.
Correct.
So, yeah.
Anything else you want to cover?
Let's see. Tax Cuts and Jobs Act. So tax
yeah.
bill that passed.
I want to know all about this.
Yeah, so
when did it pass?
This was end of 2017, became, effective for the 2018 tax year. So
Okay.
we've been under this for a while. Like, I can't believe it's been that long since this passed.
This was Trump, right?
Yeah, the Trump tax cuts, right? That's what everybody calls them. So that provision, those bills, a lot of the provisions specifically for individuals in that law expire at the end of 2025.
Okay.
And nobody's really talking about it.
Like I remember before 2017 that you could write off unreimbursed expenses as a W-2, like tax. W-2. What am I trying to say? It's a W-2 employee.
Yeah.
That went away.
That will be coming back. But now this is all said with the assumption that Congress doesn't do anything. Like
Okay.
If nothing happens, if the government doesn't take any action, what we talk about right now, this is what will happen. Now, we have an election this year, so lots of things could happen before this bill actually ends up expiring.
Do you think that maybe these tax cuts or whatever you want to call them, do you think this could have been the reason why W-2 people were trying to open LLCs and do all of these things because they were unable to write off unreimbursed expenses?
Potentially, I could see that in some industries.
Because this kind of hurt my business a little bit because, I had employees at the time that were wanting to do things as far as like purchase leads or, marketing ideas and everything along those lines. And they would come to me and say, hey, I want to spend this money. And if it was something that I couldn't get behind, I had to say, no, I don't think this is a good idea. And the main reason that they didn't want to do it with their own money was because they're like, if I spend this money, I can't write this off on my returns. It's a true business expense, but unreimbursed expenses, or IRBs, as we used to call them, went away. So it's possible that could come back.
Yeah, it will. Yeah, if nothing changes, it will automatically expire, and what is in place now will expire, and that will come back.
Well, that's exciting for my personal business in regards to employees, but definitely hurts me in the respect of now we have W-2 employees that we have to look out for, because right now, like, you're a W-2 employee, I don't even search your returns for unreimbursed expenses because I know it doesn't exist.
Mm-hmm.
But I used to.
Yeah. The other thing, similar line item there, is the fee you pay to your tax preparer.
Okay.
Fee. That used to be deductible. Advisor fees, investment advisor fees, those used to be deductible. Those will all be coming back unless, something changes.
Those aren't deductible now, huh?
No.
I didn't know that.
They're not. They're all considered miscellaneous itemized deductions that went
Interesting.
away. Yeah, amongst others. There's plenty of others.
And
that
here
fall
the
into
guy,
that.
Donald Trump, that they thought was, given all these tax cuts, he just took stuff away, is what you're
Yeah,
saying.
so I think it was intentional that they set this to expire because the corporate tax cuts aren't expiring. Those are permanent. The corporate
Gotcha.
tax cut rate, went from, I think it was 35%, and now it's a flat 21. There were brackets like there were for individuals, but
Interesting.
now it's a flat 21%. That won't be changing. That's permanent.
What else is potentially changing?
The standard deduction will be cut in half. Right now, standard deduction is like 13 grand, 26, 27 for a married couple. I think somewhere in that range. That'll be cut in half.
So that hurts W-2 employees.
It does. It does.
But if you bring back unreimbursed expenses, you could potentially.
that'll help some of them.
Yeah.
The other thing that'll apply.
I didn't realize I knew so much about taxes. Over here, like, no, hey,
I'm sorry.
that's okay. Yeah.
So those will come back. Let's see. The standard deduction is cut in half, but the personal exemptions will return. So if you'll remember, pre-TCJA, when you would claim someone or a dependent, typically it's your child on your taxes. There's other ways to do that, but typically your child, you would get a personal exemption, which is a deduction for them. Well, when the TCJA came in, that went away. There were no personal exemptions, and they doubled the standard deduction. So all of that's reverting back. Standard deduction cut in half. Personal exemptions will be back. So
What are examples of personal exemptions outside of a spouse?
So you would get one for yourself. You have a spouse, and then children. Those are the obvious ones. Adopted children. Could be a if you're caring for another family member. that could be one, like a parent.
How do you prove that?
I don't know off the top of my head, I don't know the underlying requirements,
Okay.
honestly. But there's specific written rules for this. And there are plenty of different people that you can claim as a, dependent or an other dependent on your return that aren't your children. Family
Right.
members that need, assistance living.
That's
and,
what I figure. I mean, what do
I
you
believe foster kids probably. So there's a lot of options there, and it's going to matter a lot more because right now the only thing that matters is the child tax credit, which is $2,000, and then $500 for those other miscellaneous dependents.
start thinking like the parents from Blindside?
Yeah,
You know what I'm talking about?
Yep, that movie. Yeah. So that all goes back. Alternative minimum tax is going to be back in play. That still applies sometimes, but
What is that?
So it's basically just basically what it is called alternative minimum tax. It's a different set of rules to calculate how much tax you owe, and if it's higher than what the regular rules calculate, you owe whatever the alternative minimum tax is. And it's been gone for so long, like there's a lot of differences there between regular rules and the AMT rules, and so those will apply. Typically, only hit higher income taxpayers.
Sure.
So a lot of people aren't going to see this, but that will be hitting more taxpayers. But then the good thing for Texas residents is the SALT cap, the state and local tax cap. So state and
we
local
don't have
taxes,
state taxes.
real estate taxes.
Ah.
State and local taxes are itemized deductions. So if you're itemizing, you're over the standard. Right now, you are capped at $10,000 in state and local taxes. And it's pretty easy to hit that $10,000 in Texas. I mean, you add your real estate taxes, and then there's like a table calculation for sales tax that everybody gets.
So what's it going to go to? Or they're just going to eliminate it?
There
There is no
cap.
cap.
There will be no cap. So I have a lot of taxpayers that are capped out on this, and so that cap will go away, and you'll be able to deduct all of your state and local taxes rather than just $10,000.
That's awesome.
So, and make sure if you buy a car on this topic, if you buy a car during the tax year, you're going to pay sales tax on that. Make sure you give that to your tax preparer. That gets missed a lot of times. If you're itemizing, that is a local, state and local tax that you're paying that's deductible. So you want to make sure you're including that. And then kind of unrelated to individual income taxes, but the estate limitation is going to get cut in half. So right now, if you die and you're passing on assets, the estate limitation is like $12 million, somewhere in that range. It'll revert back to about half that. So you can pass down that much in assets before tax kicks
I
in.
see.
Yeah.
And when does this all get implemented?
It'll apply these rules.
Assuming nothing gets changed?
Assuming Congress does not act at all, these rules will revert and be in effect for the tax year 2026.
Okay.
So they expire. The current TCJA.
And are there any
rules expire in
incentives or
2025.
anything politically that you feel that Congress would turn around and try to make these changes?
I think something will happen.
Okay.
I mean, even from both parties, I think no matter who wins the election this year, I think it looks bad on both of them to not do something and try to retain some of these rules. Something we really haven't touched much on is QBI, qualified business income deduction. Anybody that has a pass-through entity, S Corp, or even if you're just filing as a Schedule C, you're getting to deduct 20% of your business income, and that was part of Tax Cuts and Jobs Act. That will go away too. I think there's a good chance that will stick around.
And so why do you feel politically that the things that are going to revert back would be bad for no matter who wins the election type of thing? Like,
well, Biden said multiple times he's not going to increase taxes on anyone making under $400,000, I think. I'm pretty sure that's what he said before. And it just looks bad on the Republicans to pass a tax law and then let it, if they're in control specifically and have the ability to pass something, it looks bad on them to let these expire and increase taxes on individuals. That's like completely against their platform.
Right.
So I think either way, something will happen, or they will attempt to do something. The problem is there's so much gridlock right now that we might end up in a situation where, hey, they want to do something, but they're just kind of held up.
Because the stuff that was set up was implemented for the tax year of 2017.
It was passed in 17, effective in 18.
Right, which was right after the election of 2016.
And I believe the Republicans
which
had
was
control
Obama.
of Trump.
Right? 16. Got it.
So, yeah.
Trump.
Trump would have been he would have started in 17.
Yep.
Right? Yeah. So, and I believe at that time when that was passed, the Republicans had control of obviously the White House and both houses of Congress. So they were able to do that. If that happens again, I would expect a pretty big tax overhaul, similar to what we saw in 2017.
Interesting.
So, but that's all politics. I'm not a politician. So.
Me either. But yeah, this has been fun nerding out. Is there anything else on your sheet you want to cover?
Let's touch on one more thing.
Yeah.
Everyone's hearing about the 87,000 IRS agents that have been hired. Have you heard about this?
Yeah.
Yeah. So I do want to, just the IRS is still operating on 30, 40-year-old technology. And the reason they are such a pain to work with is because they're working on 30 or 40-year-old technology. And, one of these, pandemic-related bills or in that time frame, one of those provided quite a bit of funding to the IRS. And it's not very popular, right, because nobody likes the IRS.
Right.
And the famous thing that everybody's heard is that they're hiring 87,000 IRS agents with guns, and that's just not true. Very few IRS agents have guns. I actually applied for that job, didn't end up going down that route because the pay is horrible, but that's not the case. The majority of this funding is going to update technology. For example, the IRS has rolled out a direct file program, so a lot of taxpayers can now just file directly with the IRS. They don't have to go through TurboTax or a CPA like me. Now, that's only going to work for people that have simple situations.
If you're like making under like 36,000 a year.
Yeah, but it's great. That's where this funding is going. Updating the tech, so now you can sign up for an IRS account and you can see your transcripts. And I have a Tax Pro account where I can go in and I can for certain things I need to do with the IRS, I have to get a power of attorney from the taxpayer or other types of forms. I can have those forms processed through the IRS's system to speed up those things. And so this funding is actually a good thing from my perspective. And I think it's good to share that just because of a lot of people don't understand what the IRS is working with. They've been underfunded for years. And so that results in horrible taxpayer assistance, burned mail, lost records, erroneous notices, those kind of things.
Yeah.
Yeah.
I love it, man. You got everything out?
Yeah, I did.
Fantastic.
Cool. Was that an hour and a half?
Easily.
Really?
No, it goes quick.
Doesn't feel like it.
It goes quick.
Dang.
I'm watching I always watch my monitor here because it tells me how much time we have, and I think we went just about an hour and 40 minutes because that one's about to power down. So
yeah, when you asked me, I'm like, wait, are we at that time? I didn't know. So.
No, it's all good, man. I appreciate having you on. I tell everybody who's on for the first time, this is like going to the gym. You know, like. You want to be on here on a semi-regular basis because my favorite podcasts with everyone are typically like the second or third one. Right. The first one's just you kind of explaining who you are, what you do, but then the clips that do the very, very best are the ones where we kind of get into, like the specific things we talked about with like tax cuts and everything along those lines. And, once people kind of know who you are and it's easier to unpack, like it's a lot more fun.
Yeah,
so.
I'd love to be on again. There's plenty of tax law to talk about.
I love it. Well, again, it's not just the tax; it's like the client stories and everything.
Yeah,
it's kind of crazy. It's like the negative stories that they do so well in terms of like views and everything. That's what people want to see. But hey,
cool.
Life is a reality TV show.
Yeah.
So appreciate you coming on and everything. We'll have you on again.
All right, man. Thank you.